We're back, and today we are going to show you how the professionals review a commercial property catalogue. Now, in this episode, we're going to be going through the entire catalogue, but more importantly, we're going to point out what we find is interesting. So we've got 3 properties that we're going to look at in depth, and we're also going to be talking about what makes up a commercial property catalogue and try and figure out what the motivations are for the people that are selling it. And in the process, we're going to do a follow-up video to show you the sell prices. So make sure you watch this video through to the end. Don't forget to like and subscribe, follow what we do. Let's get into it. Before we go any further, if you're enjoying this content and you want to learn more about auctions, about trading, about flipping, about making money in property, then make sure you click on the link below and join us at our next property trading retreat in Portugal. The retreat will show you 5 things. First, how to find trades. 2, how to format them, that's how to put them together, how to structure them. Then it's how to fund them, it's how to sell them, and ultimately, how to have fun doing it. So, put your details via the link below. That will get you a phone call with me, and we can go through the retreat and show you how you can make money in 2025. Piotr, what's the first property?
So let's look at the whole catalogue. It's got 28 properties in this auction, and there are some real gems in this catalogue. There are properties for all kinds of investors, and this is a commercial catalogue, so most of the properties are rented. There's some development opportunities. There are some really creative commercial investments that we'll look into. So first of all, the 3 properties that we picked that seemed really interesting is lot number 1, a cancer research led shop, a freehold in Winchester, very prime location. Then we have Halford's Auto Centre, a property led to Halford's until 2036, but it's a prime development site. It's in Staines upon Thames, and also very prime investment in Covent Garden, available with a guide price of 5 million, and we'll look into those in details. Shall we start with cancer research?
Let's do it.
Let's go for it.
Okay, so this property, just for everyone's information, is a cancer research building. This whole freehold all over here, it's led to cancer research until March 28. The rent is 21,800, which isn't overlet at all, and the guide price is £225,000. So just for everyone's knowledge, this is on behalf of SIP trustees. So someone has it in his pension, her pension, and they're selling it. It's a VAT-free investment, and fun enough, it was purchased, guess for how much?
Go on.
£350,000. And I think this property, given the size of it, given the location in prime Winchester, I think if it was vacant and fully let to like a really good operator, it should be let at about £40,000. I think it's a 550, 600k investment.
Okay. Well, I mean, I do like charity shops. Just to be clear, it's not an actual cancer research centre. It's actually a charity, obviously next door to Oxfam. So cancer research and charities in general are doing really well, because ultimately that's probably the majority of the people that occupy in the high street. They're actually being able to sell stuff. So people are looking for second-hand. They're trying to really upcycle stuff where possible. It's good and friendly for the environment, and also it's a lot cheaper. So I actually think charity shops are really good covenant, especially people like Oxfam, Cancer Research, etc. Good position. I feel like that kind of position, you can re-let it quite easily, like you said. And also, I'd rather start with a lower rent and base my purchase price based on a lower rent than start a higher, and then obviously you have to go down. So from my perspective, I like the fact that it's on a lower rent than compared to market, for example, and it's probably, like you said, maybe 50 to 60% lower than what the market rent should be. So from my perspective, I think based on the guide, based on the current income, do we know how long is left on the lease as well? Is it 2028?
3 years.
Yeah, so I reckon from my perspective, that's a nice time frame to kind of buy it, just asset manage it, and then as you get to that 2028 period, re-gear it, and either, if it was me, I'd be trading it on at that point, so obviously try and gear up the lease to whatever, 36-ish thousand, or you can basically, you know, just refinance it or hold it, whichever you want to do. But yeah, I like it. I think it's a good starting point for me, and it'd be something I'll put in my pension for sure.
Well, about 5 to 7 years ago, there were a couple of charities, Cancer Research being one of them, where they were closing ancillary kind of locations, ones that were underperforming. They were only doing it once the leases had run through. They weren't doing, trying to get out of their leases or anything like that. So, for this to have survived that cull, it is really well located. It's a good high street. It's a good value location anyway on a pound per square foot basis. I think it's a good deal. I think charities are normally really very good tenants anyway, like very, very low issue.
Amazing. Okay, well, let's see how it's going to perform next week, but it's a good highlight.
What do you guys think it will sell for, just out of interest?
I think about 350, 360.
Okay. I was thinking probably more like 285, 290 maybe. I just didn't see it maybe making 300, but yeah, it just depends on how much yield someone's willing to pick stuff up for. Because the stuff with like this, finance is going to be too expensive, so really it's going to be someone that's going to be holding it into a pension or just buying it and holding it cash. So yeah, maybe 285, I'd say.
I think it'll hit 3. I'm gonna be a little bit aggressive and say 305.
Cool. Let's see.
Let's see. Okay, brilliant. Well, the second property is this motor trade industrial.
And this is the one you really like, Piotr.
I really like it because it's like, I would say, if we had a fund that's got like a 10 to 15 year period for investment, this would be really good because the lease expires in 11 years, 2036. There's a tenant-only break option in 2031, so in about 6 years. And basically, this is a prime development site. You can clearly see what you can do on this. At least 3 floors, maybe more. And I think it's a really good location. So currently, this is generating 51,000 per annum. It's guided at 750, and it's being sold on behalf of a major fund. I think it's a really good site.
I like it. I think one of the things to consider with a site like this, if you're looking to buy it for the development side of things, would just be paying very close attention to the land contamination issue. But it's surrounded pretty much on all sides by residential on that side of the road, which is really good. And the actual building's only occupying a third of the site, so it means you can demolish, step it forward a little bit, and still have parking and grounds and stuff like that. So yeah, I like it.
Do you know when so basically the lease is until 2036. Do you know when the tenant-only break option is?
2031.
2031. Okay, so you've still got a solid amount of time really on that. Nice. I really like the fact that it's one of the most underdeveloped properties in that area. That's really good. Contamination 100% is probably one of the biggest red flags from a development point of view in the future, but you'll deal with that later down the line anyway. My other point here is, who would you get as another type of tenant for something like this without having to redevelop it? That's my question really, just from a risk point of view.
To be honest, I think tire centers are always going to be, even with electric cars, tires are still going to be quite an important thing. Mm-hmm. We have some commercial units. We get a lot of inquiries from motor trade people, car repair, and I think this site is prime for something like that. And again, I don't think the rent is overlet. I think it's fairly decent for what.
Yeah, I mean, my only question was,
I think if they left that location, I think someone like Quick Fit will sneak in there because they're always looking at filling in gaps of other motor trade kind of people that are there, and it's main road. It's right in the middle of that whole bit there. I think it's a good.
Yeah, I mean, the location is absolutely spot on, and also it's a good potential development exit if you want to in the future. My only sort of concern here is, why is the fund selling it? Especially because we've been seeing stuff where, especially sort of funds and things like that are getting rid of properties where it's coming close to the end of the lease, or there's a potential that they've had a soft conversation with the tenant and they think that they're going to break, or they know that they're going to break, but it's not been formalised yet. But why would a fund like this be disposing of something like this?
I think sometimes funds have they've got financial reasons for exiting developments or sites like this, and maybe they need funds somewhere else. Maybe they've got certain liquidity requirements and they need to liquidate some assets. I don't think there's anything untoward going on here.
Yeah.
It's probably the exiting of not the asset class, but the tenant class. It may be that they have several of those, and maybe they're feeling exposed and thinking, right, we need to diversify over into this direction. The ESG stuff, the funds are paying really close attention to that, so that could be a driver here as well.
It's always worth asking the question, though, isn't it? Just to kind of put yourself in that mind space of why, and also for a fund which seems like it's going to be quite a decent sized fund, that's a small asset to be disposing of. So it must be part of a larger portfolio of assets that they're going to be disposing of rather than a single. It'll be interesting, Piotr, to maybe just research more about that fund for the next episode and just understand, have they been disposing of other things in other auctions or etc. and maybe just get a bit of a background on it. Surely there must be a PDF on the internet about it at some point. So yeah.
Pretty sure.
Cool.
Yes.
Okay.
Hi, I'm Michael Alison. I'm the Commercial Director at Roma Finance, and I'm delighted to tell you that Roma Finance have the flow bridging range, which is specifically designed for those fast completions, which will come in handy when you're looking at purchasing a property at auction. If you want to know more, please don't hesitate to get in touch. Thank you.
And the third property
This
that
is my favourite one, just to be clear.
It's my favourite one as well. Yeah,
Only because size matters here.
This is the one. This is the one where I look at it from when I used to run, a family office, and this would have been the generational wealth play.
It was generational wealth play. It's been first time on the market in 100 years.
Multi-generational wealth play.
This is the one that your great grandkids will smile and say thank you for buying something like this. 100%.
100%. Yeah.
So let me tell you a bit more about this property. So this is prime Covent Garden, and this is an office and retail investment. It's all led to one company called Clare Morris Properties, trading as Scott Brownrigg. And basically this property is let on a 99-year lease from 1982, and they're paying currently £270,000 per annum. And there's a rent review coming, but the rent reviews are every 5 years, up to 60% of open market rental value. So it tells me that currently this 270,000 is no more than, say, 50% of the open market value, which will be about 540,000. And it will increase probably to, say, 320 or so in the next couple of years. But this property is gigantic. It's got 16,000 square feet. And I think as a rule of thumb, if you look in Covent Garden, if anything is below £1,000 a square foot, it's cheap. And prices can reach as much as £2,000 per square foot here. So even at £1,000 per square foot, that would be 16 million based on the current size. So what do you guys think?
Yeah. I mean, that's a lot of real estate for your money in Covent Garden, a lot of real estate for your money. But, and this is the big but here, obviously you've got a limit. This is almost like a regulated tenancy style situation, but in the commercial space, because you've got a limit as to what rent you can charge. You've got a limit as to when you can obviously increase the rent, etc. So this is very, very much a long-term play where you would buy it, hold it, asset manage it. You just want to deploy your funds, and that is better and safer than a bank, in my opinion. I love it. It's the type of thing that you would want, as Jay said, if you were managing a larger fund. The only thing that I thought would be interesting to discuss is what an absolute great lease that those guys have got. What is it? Scott Browring. That's an incredible lease to have. That in itself is worth its weight in gold as well, to be fair. At that cap and rent level, I thought that is absolutely brilliant.
Yeah.
When it says no breaks for a lease of that length with that kind of income, because you can't really undersell that income on what is essentially a ground rent, right? It's a single building. I think this is magnificent. This would, if I had access to the environment I was in before, I would buy this, and it would be a little jewel that would sit there for the next 60-ish years, less than 60 years, and it will be fantastic, because every year that passes, the reversionary value and the increase in rent at the appropriate intervals, this is upwards only.
Yeah, it'll be interesting to know, and I'm assuming it is. This is probably going to fall within the sort of the act, isn't it? Where basically they're going to have first right to be able to extend the lease if they wanted to, unless you did some kind of development work. So I'd be interested to know whether in, what was it, 2081, I think it was, that you get the property back technically. Would you actually get the property back, or do they have rights to then re-extend it?
So I think with long leases like that, you actually would probably get the property back, or you get they may get a right to extend it, but probably at the market value.
Yeah.
Not.
Or you can say that you're going to be doing some kind of development works on it or whatever and redeveloping it, and then obviously you can get it back.
Or right. Occupy it yourself for your own business purposes.
Yeah, just a massive office block, just for one office. 15,000 square foot for one office, brilliant.
We'll do a crowdfund in 50 odd years, Dave.
That is brilliant. But yeah, that's genuinely my favourite one. I like it.
So in terms of the rest of the catalogue, there are 28 properties here, and I think the real standouts are the properties offered by the Nottingham City Council. There's quite a lot of them. There's a car park in Nottingham. There is industrial units. There's more
multi-let commercial from the local authority. Depending on what comes out in the legal pack, these are exciting opportunities for SAS and SIP investors. People with portfolios that are looking to diversify into commercial. That multi-let commercial stuff is absolutely gorgeous.
There's several of those in this catalogue, so it'll be really interesting to see how they perform. And there's also a few properties offered on behalf of Network Rail that are like really good development opportunities, but Jay has some concerns about working with Network Rail and developments with that. So
well, the interesting one there is the site that actually has planning permission that's being sold by Network. That's the one, because you don't see that very often.
Actually, it doesn't have planning, Jay. It's got a draft plan.
Oh, draft plans for 22. But
you just got fooled, Jay.
I know. I got catfished by the auction. But even the fact that even the fact that they've done draft plans, you have no idea how rare it is for a public body like National Rail to take those steps prior to marketing a property. So, even in that regard, it's impressive that they've taken those steps, because normally they wouldn't. But clearly they see an uplift in value by having that built out.
Some great assets in Acutus this month, to be fair. That is, I mean, genuinely, if you're sat on cash and you just want to deploy it, there are some really, really good opportunities in that catalogue.
Amazing. So what we're going to do is we're going to leave it at this in this episode, but we have a special spreadsheet that we put together with all of the auction lots from Acutus, the 28 of them. We have income details, guide prices, and then we'll come back next week and we'll comment on actual sold prices compared to what the guide prices were and how it all performed. So stay tuned for part 2 of this review of Acutus catalog. And let us know also in the comments, are you looking to buy anything? Are you looking to do any kind of deals? Is this property in Covent Garden within your scope? Also let us know what kind of investments you're buying. So that's it for today. Guys, make sure you subscribe and follow our channel and come back next week for the results.
Hi, I'm Michael Alton. I'm the Commercial Director at Roma Finance, and I'm delighted to tell you that Roma Finance have the flow bridging range, which is specifically designed for those fast completions, which will come in handy when you're looking at purchasing a property at auction. If you want to know more, please don't hesitate to get in touch. Thank you.